Dan, can you tell me a little bit more about your background, please, and what brought you to invest in UK property in the first place?
Yeah, actually son of a developer, so I was working on sort of building sites as a sort of 16-year-old lad, but then moved into the multiple different investment classes, but really was in the tech space, and went out and did a lot in that, and then started investing in property myself with API. Bought a number of properties over the last few years and liked it so much that I ended up joining them.
What unique experience has excited you on your journey in property investment over the years?
Probably the ability that it's going to give me to retire sooner than I thought I'd be able to. I think the ability to build passive income to, you know, really retire off essentially is the most exciting thing about it.
So Dan, how would you describe your investment strategy when it comes to UK property? And then if you were giving advice today to a first-time buyer, so someone who's not bought UK property, what would you advise them to do?
I think one of the big things about property which makes it super unique is the power of leverage. You know, the fact that you can put in, you know, sort of 25% into a property, use a mortgage for the rest of it, and compound your money at sort of 4 times that. So, you know, 1% would be four times that from a return on investment perspective. And when you start looking at return on capital invested, then it gets really exciting. And so the advice that I give to an initial investor is try and look for, you know, obviously the product-wise, it needs to be, you know, in the right areas, looking at the macroeconomic fundamentals of that area of, you know, education, corporate relocation and transport. And so location is obviously key on that, but the structure that you're buying this property in, whether you're putting in an SPV or new tax structures around it and where you're going to be domiciled, but then equally making sure that you're using the right leverage structure, because you can make the money work much harder.
Yeah. Okay. And presumably to get on that housing ladder sooner rather than later, I guess.
Well, exactly. I mean, you know, when people ask me, when is it a good time to invest? Yesterday is something you've got 200 years worth of data. It suggests that.
So Dan, if you've got someone who's never bought property in the UK before, so they're buying the first property and they need to evaluate that with your guidance, what would you be saying to them?
There's a number of different things. I mean, it really starts around the due diligence side of things, right? And yeah, you hear some of these horror stories about, you know, people investing in property up and built and things like that. Making sure that you're working with a reliable business and tier 1 developer where, you know, API is an example. We take a commercial real estate angle to it. So it's a regulated mindset to an unregulated asset class. And really what that means, Rob, is we've got 121 point due diligence sign-off assessment where we're looking at everything from liquidity of developers to JCT contracts being signed to joint trust. And, you know, the deposit protection is a key one. You know, never invest in an off-plan project as an example where you don't have any deposit protection, because if that goes under, then they lose all their money. So, you know, the main thing I'd say was invest with specialists.
Yeah, there's obviously a lot more to it than meets the eye and taking expert advice.
Definitely. And filter that as well. You know, if you're looking at it as a straight investment products, or it needs to align to your investment goals and strategies. So whether that is retirement planning, succession planning, wealth preservation, because different properties and different selection of that property will provide different things and structure.
So Dan, when we look at the UK, are there any areas that stand out in terms of maybe where people should be thinking of investing?
Yeah, I mean, 100%. You know, the right across the UK, they were the biggest supply and demand imbalances that there's ever been, the biggest population growth. So, you know, the projected growth across the whole of the UK is massive. But, you know, if you're really talking about the places which are eye-wateringly obvious, you know, you've got to go with Manchester and Birmingham. I mean, you know, Manchester is an example where you've got 120 caps and students with 6 universities, you have a 51.5% stay rate. So, you know, corporates are now seeing that and really land grabbing that to take young talent coming up through it. You know, we've got institutions like BBC moving from London, British Broadcasting moving into these areas and such.
2 world-class football teams as well.
Yeah, one and a half. But yeah, and you know, with Birmingham, if you've got pretty much all of retail banking now going into Birmingham, with, you know, everything from Citibank, HSBC, the World Bank is moving out of Canary Wharf, which that helped, probably the most iconic tower in there, moving a huge part of their operation to Birmingham, HS2 lights, so on and so forth. What we've seen certainly from COVID and Brexit and all these things that have gone on, people are realizing that, they don't need to have a big, massive, giant tower in London, and they are moving to these more regional cities to land grab, not just, young talent, but also more affordable, payment structures for people and so on and so forth. So, the definitely Birmingham and Manchester would be the highlights for me. And then there are regeneration zones in London which massively outperform traditional areas.
It's really interesting. So a bit of a leveling up, I guess. So money coming out of London into Birmingham, Manchester.
Yeah, correct. And, you've got macroeconomic growth of, 20% over the next 4 years, and that's all the way out Greater Manchester and Greater Birmingham. What we would suggest as a business is, let's find a growth zone within the growth rates and really look micro in there and find, what would B1 Manchester, B1 Birmingham and M1 Manchester, right next to train stations, really commutable to CBDs and commercial districts. Land grabbing that at the moment, I think, is the real opportunity.
High speed 2 as well.
Yeah, HS2 line as well is the obvious one. Billions of pounds coming out of London and go straight to Birmingham there. And, Lend-Lease do a 2.1 billion master plan in Smithfield redevelopment and volume. There's just huge amount of opportunities, I think, in those areas. When you actually look at the last 5 years' growth from a Manchester perspective, in comparison to a central zone in London, I'm talking 12 to 17% in London, it's talking about 45 in Manchester. That says it all. And then from a yield perspective, you're traveling at 6% around there on average in Manchester, where you're talking near the 3 in London.
It starts, obviously you live in Singapore, I'm in KL, it's starting to feel a little bit like Manchester in particular is feeling a bit like a fast-growing Far Eastern city. Do you say?
Yeah, completely. I mean, it's transformation of the whole city. It's just phenomenal. We recently, as a business, just nearly finished the W residences, which is right next to this hall. But you just walk around those areas, it's just amazing. There's a reason why it's been chosen as the most livable city in the UK for a number of years now.
So if you look forward to the next 5 to 10 years, Dan, what trends do you think we'll see? What opportunities maybe for people?
Look, the biggest thing is the supply and demand imbalances, right? 4.3 million kids, gap at the moment. They're currently building over 100,000.
So that the demand for homes that we need to hire,
that we need to fill in now, and even if you'd have to build nearly 700,000 a year to keep up with where we're at, and we've never even done that. Labour are saying that we're going to be around the 300,000, which I don't think they're going to do. So that gap's real and it's going to stay there. You've also got the biggest population that has ever been there. And you've got what we call generation rent in the industry, where, the average age of people buying is just going up. And what's happened in the budget, as an example, where they're the taxing businesses more, that's just going to come down onto the consumer. So the price of everything, a beer, loaf of bread, everything is going to go up. And obviously they're taxing the actual individual. So if you're actually in the UK, your disposable income is going to be less. And so your investable capital to buy your first home, so on and so forth, and isn't going to be there. So you see sort of a perfect storm for an outside of the UK. There's still people who do have the money, but I think there's going to be more people renting, and the supply and demand imbalances are going to grow.
So the demand for properties to be rented out is going to be there. Rents will stay high, arguably.
Exactly, and I think the rent, the demand for the rent, particularly in central business areas where all of the sort of commerce is just going to go up and up. When you're talking about the amount of people being able to buy property, although the Labour are talking about they're trying to change that, well, I think they're actually making it worse for people. We're even putting stamp duty up.
Yeah. Are you seeing a trend for people to move from the countryside back into the cities? We've got new schools open in the city centres, haven't we? And I'm sensing that people are liking the city lifestyle, which would be normal in Singapore, KL, Hong Kong. Do you think we're going to see people move from the leafy suburbs and into the city that will drive further demand? Yeah,
certainly I think the younger generation is people who are young professionals coming in there. The convenience level, I think, is massive. around that, but also the buzz of the cities. I mean, living in the middle of it, I was somebody who grew up in the Peak District, so I couldn't wait to get into the goodness say, and never wanted to sort of come out of it. But yeah, no, definitely. I think just the sheer growth of these cities, and particularly with all of the businesses moving across from London. When you talk about Manchester and Birmingham, yeah, land grabbing the central zone to nice next to all the nice bars, the restaurants up and so forth is so.
Yeah, it's really nice to see, isn't it, that cities are alive 7 days a week. People enjoy their lifestyles, are nice and safe, clean.
Correct. Well, particularly Manchester, I just represented it, didn't it? Last time I was back in the league.
So Dan, for a first-time investor who's looking at investing in UK property through yourselves, what would be their biggest challenge, would you say?
Selecting the right property, working with the right people, to be honest, to make sure that, it's aligned to their investment goals. They really need to understand the due diligence around it, even looking, these are things that non-investors don't do, but, looking at what construction teams are working on these projects, because, for some not as good and well-constructed place for massive issues, make sure you're buying quality with the right people and the right sort of protection, and that all the sort of I's are dotted and T's are crossed, essentially. I think it's that side of the
Quality.
Yeah, if it is an investment, the best investment product, if it is something that you're potentially going to be going to move into, that it's the level of quality that you'd expect if you can pay the money for it.
So Dan, how do you think the UK's current political and economic situation is impacting on the property market, if it is?
Yeah, look, as I said previously, I think that I think that what they're doing from a tax perspective to businesses and to the individuals is crunching the actual disposable income for the average investor or the average person in the UK. And so the ability to buy property and invest in property is sort of dwindling and getting shorter. So I think that's a massive issue, really, from a local UK perspective. I think it's a good one as an investor, because it just means there's going to be more people rent it.
The supply and demand, and the fact that we can't meet that.
Yeah, exactly. It's eye-watering when you actually start looking at all of this and breaking it down in numbers. And obviously, the major issue here is the Labour government, what they're doing, trying to tax as many things as possible. But I think that, understanding the right structures, the special purpose vehicles that we suggest putting green in, just understanding capital structure, the investment property is really important. And stamp duty, of course, they've put that up, and in next month actually they're changing that, where even the threshold from 250 moves to 125, things like that. But realistically, property shouldn't be a short-term investment. It needs to be a long-term strategy which aligns to your investment goals. So although frustrating, it doesn't change the sort of valid business reason why you do that as an investor.
So Dan, with property, it can come with inherent risks, especially for the first-time investor. So what would your advice and guidance be around mitigating, reducing those risks? And what would those risks potentially be as well?
Once again, get the right advice. They work with professionals who, really look after you from an end-to-end proposition of this, even from management of the processing, the legal setup that you purchase the property in. If it's an off-plan, the biggest risk, honestly, for off-plan bills is they don't get built. I hear about some of these nightmare situations with these developers in Liverpool where they're asking for 35% deposit, no deposit protection. You really are running a gauntlet there, where if they do run out of financing, you lose that. And so, you're going to make sure that you're getting the right deposit protection in place, and you're working with tier one developers, in my opinion, because an off-plan builder. Even as API, one of the areas that we really look at is, buy distressed assets, where these are developments which have gone sort of bust and the developers haven't been able to service the debt. We're going and buy that for the debt of the bank to create, obviously, massive deals and discounts for investors. But even structuring that in their purchase and having the right management team to look after those properties, and that's huge.
So finding the right property, making sure it's completed. But then I guess part of your other services, finding tenants and managing that? Because obviously then you need a tenant to create the income to pay, especially if you've got a mortgage.
Correct. And so we've got Redstone, which is our property management solution, which is really investor-centric, really hands-off, hassle-free solution. I've got a number of properties with Redstone. I don't even know the names of any of my tenants that want to, no respect to anyone like boiler breaking. Really, really important on that. Also, have a proper professional team to vet the tenants that you're going to have to, really look after it end to end, from furniture packs to, making sure that, it's fully managed in the right way. They're getting the rent for you, it's in the right contract for these guys as well.
So you're taking away all the hassle they get, especially if someone's living overseas. It's a turnkey package.
Yeah, so the main frustrations with properties, if you try and manage yourself or you get bad tenants and things like this, and just by the nature of what we'd suggest people to go into, we wouldn't deal with the sort of lower socioeconomic areas of product where you sometimes might have risk of not paying, things like that, just from a product structuring. But having a great management team who sort of look after that and do the right due diligence, even on the tenant, is super important.
What would your top tips be for somebody looking to enter the UK property market for the first time?
Top tips: land grab, macroeconomic growth, and supply and demand imbalances. Work with specialists, and have the right management team to help you along that journey. And I think going and looking on the right move and trying to do it yourself, things like that, opens up a lot of, risks for you. But, working with specialists who do this day in, day out, to keep vet or do all the due diligence and protect investors. That's what.
So Dan, maybe a bit of a personal question here, but, what have you learned from maybe past mistakes with property that you could pass on as some wisdom to new investors in terms of what to avoid, or insights from maybe things that you've asked on your
I've actually got a very good friend who called Graham. I think he sends.
Is that his real name?
Yeah, it is.
Don't give us his surname, but
No.
it's supposed to be about you, by the way.
Yeah, I know. This is the biggest horror story that I've heard, but it ties into it. He had this guaranteed 10% government coming in and sort of funding these and being essentially your tenant, this lower socioeconomic area, and guaranteed yields of 10% for 20 years and things like that. But their break clauses at 3, 5 and 10 years and things like that. They pulled out after 3 years. So he then had a tenant who couldn't pay their rent. So he had to take to court to get the bailiffs to try and get them out. Successfully won that, had to pay for that, wasn't getting rent during that period. Then they'd sort of smashed up the place, and so he had to then refill the place, and he couldn't sell it because he'd overpaid, and he's on a relative, not so nice area for it. So nightmare situations like that. Make sure that you're structuring it in the correct way, essentially, and you're buying a quality product, because it's just like anything. If you buy some fake shoes, you buy fake football boots, they're blue break in a couple of weeks. To buy quality investment products which fits your investment goals and the right structure, we do very well. If you don't, it doesn't.
That's really good advice, isn't it? It sounds too good to be true. It probably is, and somebody have tried and tested for the longer term.
Correct. Anything that is guaranteed, anything, particularly in property, if it's guaranteed rent, usually it's a situation where you're overpaying for it, or they need the money because they're too leveraged. So they need to fill in the gaps with people buying property before they, go to receivership. So be very, very careful and do the right due diligence work.
So Dan, what excites you the most about the future for UK property investment?
Look, I think the UK is very, very unique. As that's 200 years over longitudinal data, there's only gold that's outperformed it, and that's where there's a reason behind that. It's a tiny island, which is still 5th largest economy in the world, massively overpopulated, massive supply and demand imbalances, generation rent where the age of the average person buying is going up and up. So as an offshore investor, it's like a perfect storm of opportunity. The biggest things in any sort of investment is the supply and demand imbalances. It's so vast that there's never going to get. you'd get a new bridge. So we've had a 50-year gap, and it's not anywhere, it's getting wider. And then obviously the tax strategies that you can put people in and special purpose vehicles, depending on where you've been domiciled and things like that. And me personally, I'm looking somewhere, maybe Dubai, maybe Malaysia, and maybe Portugal, where in all of these lands I'll be able to take tax-free dividends out of that, so I can retire with, passive income coming in, not paying any tax on it. So that's very attractive to me, and so they're the most exciting things.
But you love what you're doing. You're not retiring anytime soon, are you?
No, I enjoy it. The best thing for me is, this is what I do. My money, I invest with API, I buy our stock. I thoroughly believe in it, and that's probably why I'm so passionate about it. And this is, for me and my family, my succession plans, what I do.